So let's paint this picture. What do we do for investors, okay? What's this process that we have? Let's think through it. We have an investment, okay? Let's draw a home. This isn't a home though, this is an apartment building. I just don't know how to draw good apartment buildings, so we'll do one of these. Okay? Okay, what do we do as investors, okay? This apartment building, okay? Let's say we're buying it for $10 million. On FU Avenue, yes. Okay. Well, what I do is I source this deal. What we do, okay, let's think about this. We have built relationships either with brokers, with property management companies, with other people to source, maybe it's other people in our network that we're part of to source deals. And we underwrite a whole bunch of deals before we find one that hits. So we bring you, well, man, the best deals. We like literally use our relationships, our knowledge, our connections to source the best deals. Then, once we have a deal, we put our team in place. Well, first, preferred borrower with Fannie Mae, Freddie Mac, which means I get loans that typical average person wouldn't be able to get, but you benefit from it. So as investors, we invest money in as individuals. We bring in a chunk, but we also invite you to be able to participate as well. So you get to participate in this. You benefit from all the debt, all the upside, but you don't have any of the downside of the loan. I guarantee all that. I guarantee all that kind of stuff. This is what we do. When I'm saying I'm saying this is what you're doing. Y'all see that, yes or no? Yes. This is what we do. So let's say that we need to raise, well, let's just say the raise is 10 million to keep it simple. We're gonna raise 10 million from investors. Cool, we raised 10 million from investors. I pieced up together all the other stuff from investors to bring it in to the investment. I put my team in place. My team does all the due diligence, financial due diligence, physical due diligence. This is the process we go through. We walk them through, once again, one of our 12 steps. How do we know if it's a good deal, bad deal? How do we do our due diligence? We have a 297-point checklist, by the way, that we go through on due diligence. None of my investors or you would do that or know how to do that unless you learn how to do that. You wouldn't know how to do that if you've done due diligence. If you've never done due diligence, you don't know because you've never done it. But the 297-point checklist, we share it with y'all. When you're ready for due diligence, we got you. There it is. But they don't. Do you think that they've thought about, oh my gosh, 297-point checklist? No. Do you think they do go through a 297-point checklist on due diligence on a single family home? No. Broker says, or agent says they should buy it, and they're like, let's get it. Yes or no? Yeah. I mean, there's due diligence, but don't get me wrong. Okay, so they bring this in. We put our team in place after, we close, do all the legal docs, everything we need to be able to close on the deal, we close on the deal. We put our team in place. So this is an individual investor, right? Who's in here, let's say that they've invested 200K into this deal. Cool. We put our team in place for the next 3 to 5 years. We drive the value of this apartment building up. 3 to 5 years down the road, now it's not valued at 10 million. Well, let's just say that's the price. It's not valued at 10 million anymore. Let's say it's valued at, I don't know, 20 million. It's not saying that it's going to be valued at 20 million. Just bear with me for a second time, okay? 20 million. That's double the price. Is that pretty aggressive? Yeah. Probably pretty aggressive. Just bear with me. We got more value into it, okay? We're good. If I have a $10 million deal, let's do this. Actually, this is a better way. So we paint a real picture. If I have a $10 million deal, what's my loan term going to be on it? Buy for 10. Typically, we're going to leverage how much? Well, I know, but now I'm changing it. And I'm changing shit up. $10 million purchase. Let's say that we get a loan for 700, or for 7 million, right? So 30% down payment. Is that pretty reasonable? Okay. So this raise from investors is a $3 million raise, and it's a $7 million loan. Y'all with me? Okay. So we raised $3 million from investors. We have a $7 million loan. Okay, now let's say 3 to 5 years down the road, this deal is now worth $13 million. We can exit for $13 million. Okay, I go back to the lender and I say, hey, I would like to do, my loan's about to expire. Would you like to do another loan? They look, they see that the value is increased, and they say, well, yes, let's do another loan. Actually, it would need to be worth more than 13. Shit. I have enough, whatever the value would be, I forgot about this, whatever the value would be to get my investors their $3 million back, okay? It would have to be more than that if I'm getting a loan. Please bear with me on the math right now in front of you, okay? But I have enough to get my investors their money back. Y'all see that, yes or no? Yes. Bear with me. Now I give them, this investor, their $3 million back. This investor gets his 200K back. Now this whole time they've got cash flow, by the way. Cash flow, let's call it 8%. Pretty decent? Sure. Now we give them their initial investment back. What do they want to do if we give them their initial investment back? Reinvest it, but listen, nobody's investing to get their initial investment back. That's not what they're doing. So why would we do that? Well, and by the way, if you give them their initial investment back at this point, they're still an owner of this deal. So if we give them their initial investment back, now what can they do with this one? They reinvest, so we refi here. And now we buy another one down here, and this money goes into this, right? Another apartment building on FU Lane. Now investor doesn't just own one, they own how many? Two. Now we do the same thing here. We hold for 3 to 5 years, whatever the time frame is. What are we going to do at the end of 3 to 5 years? So let's break this down. We're going to refinance again, and then the investor could own. Okay, let's break this down and back on deal number one. This deal number one, if he doesn't have any more money in there, if they don't have any more money in there because we've given them their initial investment back, what is the future return on their investment in deal one? Say it. Infinite returns. It's infinite returns. If you don't have any more money in, but you still participate from all the equity and all the cash flow, just like you would if you did have it in there, it's infinite returns. Is there a model like this in the stock market? I'm giving them their money back. So if they still own it. If we refi, we still own the deal. So same owners in the deal. We've made enough, we've driven the value up enough to refi to get our initial cash injection to pull that out. That initial $3 million that we raised, we can now pull that out. Same owners own it. We still participate, same upside, same cash flow, same percentages, no percentage of ownership changes here. But what has changed is we now have $3 million that we can go buy another deal. So we can go buy another deal, they get another 8% here, plus this future growth, but they get all the future growth here. And if you don't have any more money into the deal, but you still own the deal, then anything you make above and beyond that is an infinite return.